The unemployment rate fell to 3.6% for the month, the lowest level since December 1969. Consensus economists had anticipated that unemployment would hold at March's 3.8% rate. Average hourly earnings rose 0.2% month-over-month and 3.2% year-over-year, the same paces seen in March. Consensus economists had anticipated hourly wages to increase by 0.3% on a monthly basis and 3.3% on an annual basis. Meanwhile, the economy on the whole has shown signs of trending higher, based on the much stronger than expected reading on first quarter GDP last week. According to that report, the U.S. economy grew at a pace of 3.2% in the first 3 months of the year, surging ahead of consensus expectations for 2.3% growth. Friday's jobs report looks to have affirmed the Fed's stance, said Mark Hamrick, senior economic analyst. The Federal Reserve looks at the past couple months of employment reports and certainly feels no urgency to cut rates as many investors have been hoping, or I'd say speculating, Hamrick said. As Fed officials' favorite inflation gauge hasn't been blinking red, they'll remain relatively comfortable with leaving rates unchanged for the near term. Central bank officials have been fixated on inflationary signals to determine the direction of future monetary policy, with Powell saying Wednesday he believed factors contributing to the current low levels of inflation were transitory. While average hourly wages serve as one indicator of inflation, that metric isn't as closely watched by Fed officials as their preferred gauge of underlying inflation, or core personal consumption expenditures, PCE. Core PCE came in at 1.6% year-over-year in March, well below the Fed's 2% target. Emily McCormick is a reporter for Newspulse Finance. Follow her on Twitter, at Emily_MCCK. Follow Newspulse Finance on Twitter, Facebook, Instagram, Flipboard, LinkedIn, and Reddit. Tech companies like LYFT want your money, not your opinion. Levi Strauss shares jump more than 30% above IPO price at open. Facebook sued by Trump administration for alleged discriminatory ad practices. Boeing 737 MAX groundings. Pressure. U.S. economic data. Wells Fargo recession risks remain muted as fear tracks higher. Report.